Good morning, brothers and sisters here at the Gadfly. Today is Thursday, February 3rd, 2022, and thankfully it's not Groundhog Day once again. And this is Ken Shorgen along with the great and illustrious London Paul, and good morning/afternoon to you, Paul. And man, there is some big news that really is going under the radar all across the spectrum today.
Yeah, as ever. Well, good morning, obviously, to you, Ken, and morning, afternoon, evening, depending on when anyone lives in the world or when anyone might happen to be listening to this. But yeah, as ever, we've often said this for me, and it's quite interesting sometimes on Twitter. Some of the most important things you tweet go completely unnoticed. And for me, over the years, that's been very much the case. I remember once tweeting something about the whole kind of new financial system that was coming out in the East, which obviously now everyone knows it's a reality. And it's like literally no response. And I'm like, so it's quite often the case that some of the most fundamental things we're seeing now are not always necessarily obvious to people, and that's fair enough. But that's why we try to pick on the things that to us are extremely important, even if they're not necessarily understood, or more importantly probably the significance of why we're saying.
I agree. And last week we had discussed the fact that Russia has pretty much banned decentralized cryptocurrencies, and then a day or two later, a parliamentarian from the Duma came out and said, however, we are certainly looking at passing legislation to go ahead and allow for stablecoins, i.e. resource-backed cryptocurrency. And wouldn't you know, this morning, the Bank of Russia approves a organization, Atomize, or an exchange, as the first digital asset issuer.
Well, yeah, and also worth mentioning, in the same breath as talking about stablecoins last week, there was a reference to gold-backed stablecoins. I mean,
yeah,
which
exactly.
Effectively ties in with a gold-backed cryptocurrency, a gold-backed ruble or crypto ruble or digital ruble or whatever. But yes, I mean, an absolutely, for me, extremely telling development of where Russia's going with the whole crypto space, as we've said before. And we're not going to get into bashing Bitcoin or anything like that today, but the point is that there was always going to be a market in the future, and the future being where we were a couple of years ago or 3 or 4 years ago about this, and where we are now for blockchain and also crypto. Of course there is, but our premise has always been that it's not obviously what I call, from my own perspective, sort of first generation cryptos. But yeah, they make this announcement. So actually what it says is it'll be the first company in Russia, that is, to be put on the central bank of Russia's list note of approved digital asset operators. So they sell tokenized metal note from mining, and obviously there's Nornickel's inventory, which obviously by definition is nickel. Now they'll be able to legally issue tokens and provide wallets to users in Russia. And of course it's going to use blockchain technology. So the implication of that is enormous, because obviously it's not going to just be limited to Atomize itself. So, and this is also the speed, relatively, because Atomize applied for a license about a year ago. Now that sounds a long time, but in the regulatory world, that isn't a long time, particularly when, with all due respect, Russia's got 100 million other things to be dealing with at the same time. But they applied a year ago along with other companies, including Sberbank, which wants to issue its own stablecoin. So it took about a year to approve, and obviously Atomize is this partner of this global Palladium fund, which is a subsidiary of Nornickel, and obviously there's other similar companies are now in the process of licensing in other jurisdictions where licensing is the way forward, without any shadow of a doubt. And something I'm personally involved in, which I'm not going to get into discussing because I'm not here to promote things that I have an investment in, but they're looking to move into the crypto space in a big way, and they're currently going through a huge regulatory approval to do this, and that's where we have to go. So you're absolutely right, Ken. The Bank of Russia called for a ban on trading and mining cryptos, but Putin made the point that there are some advantages of crypto which can be replicated in a regulatory environment, which could include things like the crypto ruble and what they term whitelisted digital assets under the control of the Bank of Russia. So the logical argument will be, quite rightly, that you can extrapolate this to any commodity you like. So gold, silver, aluminium, zinc, it could be other commodities, wheat, I don't know, whatever you want, and you can put it on a blockchain, and this will obviously significantly speed up, and that's the whole process of international trade. It will make the whole process far more transparent. It will reduce costs enormously. We're talking, potentially, I don't know, I mean, it's difficult to assess, but you're talking not like $1 million equivalent savings annually or 10 million. You could be talking billions in transaction costs. The speed with which you can conduct business will be greatly improved. It will make the whole process far more transparent, and far quicker and far more cost efficient. And that's the whole point of the future of using cryptocurrencies and blockchain technology, and also the real basis for central bank digital currencies, not this very peculiar alt media version of what they perceive it to be, which is just a sort of very peculiar quantum leap of something from digital passports linking to central bank digital currencies, which is controlling every movement we make on the planet, which bizarrely, of course, Britain scrapped its digital passport. So part of the chain of that thought process is dead. So anyway, I'm digressing a bit, but the point is, this is a huge announcement and a huge development, and it's just the starting process for how future global payments can be made. And the other hugely beneficial effect, of course, is it won't be part of SWIFT. It won't be part of the dollar complex. So not the United States will be in a position to be sanctioning everyone into oblivion in the future, but it will prevent anyone sanctioning anybody. And that's sort of another principal reason why they're doing this. So yes, it's an enormous and significant announcement, which will largely be lost on most people, because they'll go, well, so what? But as we've kept saying, we've talked about de-dollarization, and de-dollarization comes in many forms, and this is just another example of that.
Yeah, there's so many different potentials in all of this. Obviously, it's on a segregated blockchain ledger, but one of the key things that stands out is, if you're going to have a stable coin, do you really want to invest in a stable coin with a not necessarily a private institution, because they don't actually produce anything? They have to go out and buy at the market price, and then they sell you the product of the stable coin. But in this case, Nornickel is a smelter, and one of the biggest, obviously, in Russia. So if you have stable coins that are either tied to smelting operations, commodity exchanges, or the mints, then you have direct access where you're getting in, you're investing, you're purchasing into right at the source, or just one step away from the source. So that, obviously, like you said, it's a cost cutter. You don't have to pay a middleman. But the other thing is this by having stable coins tied to different industries, especially here starting with metals, it's a way to get especially individuals in your own country to invest in something that is tangible. You know, If something's backed by a commodity, then obviously you are not going to have the potential uh, disparity in price and loss that you have in these paper markets, which are backed by nothing, which can be expanded as they see fit. Nobody knows the wiser. I.e., look at the COMEX here in the United States, and then probably the LBMA. They're selling contracts far beyond the actual metal that they have, uh, to back them. With a stable coin on the blockchain, you can't do that. So prices are going to be much more stable, and it's going to be an investment that your capital is backed by something tangible, and from there you can whoever if they decide, you can use it on the blockchain. Say the company wants to take and grow another type of industry, then you can use your stable coins as your means of investment, and you're still backed by something tangible. So it's really, at its core, a return to sound money.
Yeah, absolutely. And here's the thing: if all these stable coins, right? Let's just say, for argument's sake, that each stable coin equates to 1 ruble. Okay, and if 1 ruble is actually backed by gold, then by definition, the stable coin is backed by gold. So in international trade terms, you're going to have huge stability. And you're not going to have massive wayward fluctuations in commodity prices either. Where in relation to obviously the gold-backed ruble, if you're pricing commodities in rubles, so it's going to make it a much more attractive proposition as well. When you, as you say, Ken, you're effectively saying we have a mechanism to trade in whatever we want outside SWIFT by a gold-backed currency, which gives you the confidence to trade in that currency, to hold that currency, because you and I are going to trade in terms of, you're going to buy our commodities, and so you might want to buy LNG, or you might want to buy oil, and you can, you've got the full confidence then that you can trade in a currency that's not going to be attacked by shall we say, outside sources such as, well, the US is an obvious one in terms of sanctioning them, because it's not possible to do that. So it's win-win for everybody, and it's not actually a complicated process to set this up. And the other thing, of course, is if you can keep maybe certain markets segregated in a very specific way. So I'm not saying for sure that this is what will happen, but for argument's sake, you might have, let's just say you're trading like LNG or oil, for example. You could have the payment process works through a crypto or a cryptocurrency related to oil, and it could be backed by stable coins, which are backed by gold effectively, and you're able to trade. It makes it very clean, very easy to manage, very transparent, and everybody's going to be extremely happy, and payment will be instantaneous. The cost of transactions, because for some countries at the moment, you have to go through all third-party intermediaries, meaning, the likes of the US or Europe or something, which you obviously then becomes a potential problem. It's just direct process. You just, it's one-to-one, not one to some other entity somewhere. So cost-wise, it's hugely beneficial, as you said, but also in terms of processing the transaction, much quicker and also much safer for all parties. So why not utilize a technology that, and increasingly, of course, this will become a way to trade. Now, that isn't replacing cash, because the lame argument is, well, our central bank digital currencies will replace cash. Well, that's just a lazy way of thinking, and it's just an alt media way. Oh, we're going to have to spin this into something it isn't. because then we can make it sound sinister because the central bank's involved. So everything a central bank does is sinister. Well, not everything central banks do is sinister. They might be ludicrous, they might be absolutely ridiculous or very ill-advised, but not everything central banks do is designed to undermine, the population, or they're pulling some secret plans from somewhere to implement something. This is just not reality. So it is hugely important. It's a big kind of indication of the future, because whatever the Bank of Russia is doing, China will follow suit, as I know the nations already are. There's in the African continent, they're working on effectively having a centralized payment mechanism, which for all of Africa, which strips out intermediaries. So this is very much a work in progress. The various nations will hook into this at different points in time, but it's a big indicator of the future, and it's something that will largely go unnoticed. No one will discuss it. No one will think it's relevant, but it's hugely relevant.
Exactly. And the thing about stable coins too is, what you were saying. First, I'm going to say what you were saying about central banks. Central banks themselves, like say a pistol, a firearm. Okay, in themselves, they are innocuous. It is only the people and the individuals who are part of those things that are where bad things happen. And in the case of central banks, is a central bank is regulated by, in the case, say the Duma or the Exchequer or the Treasury, if there are checks and balances for it, then the central bank cannot get away. But here in the United States, and as we know in the ECB, every government faction, every parliamentarian faction is corrupt themselves, so they're more than happy to see the central bank go ahead and destroy the currency, enrich the elite, and that's the way it is. But if you have that transparency, the central bank serves a really good purpose. But on the flip side of the stable coins, we're thinking things, at first here, the blockchain is global. Stable coins, while they may originate from a specific country and even be under sovereign regulation, it is international. So as a means of payment for an international system, guess what? You have now introduced, without actually having the quote unquote Bretton Woods, you have now the potential for anyone willing to accept a resource-based digital currency as a means of payment. Guess what? Now you have a cryptocurrency that actually functions as money. Currently, they don't. They don't fit the 6 criteria, i.e., as a store of value. As just one off the top of my head, that these decentralized cryptocurrencies. I mean, 6 months ago, yeah, your Bitcoin was worth $68,000. Now you lost half. There's no way in a savings account, even with 15% inflation, that your dollar loses half of its purchasing power in that amount of time. So,
No.
And of course, since we are using a fiat currency, aka the dollar, the euro, etc., it's lost probably 7% over the last year, if not more. So that is not really a store of value. But if something is based on a hard commodity, that is transparent. That's the other thing, is as long as the auditing and transparency is there, it's not only going to be accepted, it's going to be, people are going to come to it enthusiastically. And it's going to start, of course, between Russia and China, because China is going to go ahead and do their own. Then you're going to see a lot of the Asian Rim countries join in. Then you're going to see the Eurasian Economic Union join in. And eventually the West is going to sit there, and they're not getting any foreign investment. They're not, every country is rejecting the dollar. They're going to be left with a choice. And, we're seeing that up to some point over Ukraine. You know, when you have offshored all of your industry, when you are totally reliant on other countries, even so-called enemies, for your energy, for a lot of what you import into your country, you are like it's that you're the equivalent to slave to the lender, and we're suddenly
Yeah.
seeing that. So there's so many different things at the core. I want to flip real quick before we talk about what's going on in the ECB and the BOE today. You may have saw the news story that the Biden administration and the DoD came out and said, "Oh, we took out this ISIS leader in Idlib." Of
Hmm.
course, of course, the mainstream media is not talking about the mass casualties of civilians that were killed in that. But more than that, there was over the last couple days, there's this new agreement, and you haven't heard anything from the sovereignty of the UAE. But there's new agreement. Biden makes this new alliance and declares the UAE is an equivalent of like a NATO ally, and is suddenly moving um, forces in there or around the area. And I'm wondering, and I wanted to get your opinion on it, is this really all about a play to go after OPEC Plus and try to enforce their will upon the Gulf states?
Well, they can try, but it won't work in terms of that. I think what it is, and I kind of made this tweet earlier, that the US is now really trying to literally create this kind of really bizarre, what I referred to as a fiefdom of brain dead cohorts, to try and convince the world that US hegemony still exists, because the US is rapidly getting its nose put out of joint. If we look in the Middle East in general, Southeast Asia, and obviously Africa and South America and Central America, everywhere. I mean, the obvious things with Central America is what's happened with Nicaragua. Then we had obviously, okay, Cuba's not Central America, but it's kind of in that kind of ballpark area. Then we've had things in like Bolivia where they were meddling and it failed. We had Honduras, Ecuador's just come out and gone. We need to have major economic alliance with China, which of course is going to happen. So the US is losing relevance all around the world, but it's desperate to convince the world. So what it's trying to do is just grab any nation it can get its hands on, in terms of trying to convince everyone else that that it's business as usual. But who does the US have? Kind of loosely Europe, but not really. Increasingly less influence in Europe, even though it's. I mean, look at the whole European approach to Ukraine. It was so fractured and disjointed. You've got some, nations who are going, well, yes, we'll provide some forces to kind of mass near the the kind of Ukraine borders. So you've got Poland who are kind of helping, but Poland won't send any defensive weapons. Germany won't. And there's a whole myriad of different perspectives on, okay, the Baltic republics, but it's tokenism. Let's send a few thousand American NATO forces into Estonia. So what? I mean, it's completely irrelevant. But my point is that they're now having a very disjointed approach. So they will do anything to try and grab hold of any entity they can. Okay, and there is obviously, as we know, some collaboration between the US's so-called hands-off approach to Yemen, along with the UAE and Saudi Arabia. So, but I mean, the UAE and Saudi Arabia's relationship is extremely fraught now in different ways. So it's just trying to make it look like it's business as usual, but the US is becoming more and more persona non grata across the world. So, and as for OPEC, I mean, the US has got no control over OPEC Plus. Really, that's a Saudi-Russia tie-up, and everyone else just goes along with what they're saying. So I don't see it. I mean, okay, that doesn't mean that the US doesn't think that's a possibility. But then, with all due respect, the US thinks a lot of things now, which has no basis in reality.
Yeah, if you think about it, I mean, the main key players in OPEC, Saudi Arabia, Iran, Venezuela, they're already in with Russia on that. So, if the smaller countries want to do that, big whoop. They don't have enough the only thing, no, it's Qatar who is is tied to the hip with Iran for LNG, I believe. It's not UAE. UAE is sort of like Switzerland of the Gulf states.
Yeah, but with a nasty underbelly in the process. But yeah, I mean, it's
the big joke we used to have during when I was in the military during Desert Shield and Desert Storm is on the weekends we'd leave Saudi Arabia and King Fahd Airport and go over to the UAE because it was the only place in the entire region you were allowed to drink alcohol.
yeah.
Yeah, that's why we used to call it Switzerland. It's the neutral state amongst all the Muslim nations.
Yes.
But
So
that
yeah,
aside,
I mean,
yeah, I think there's really a lot going on. We just had a flash crash in gold. It's pretty much recovered everything it had, but a lot of this is tied to all of a sudden some interesting news coming out of the ECB in regards to inflation and the jawboning, the rush jawboning that Lagarde is suddenly doing about easing, and wanted to get your thoughts on that.
well, yeah, I mean, look, unsurprisingly, rather like the Fed, there's no way Lagarde's going to raise interest rates. So, I mean, what did they do? Did nothing. They just left rates as they were. And there's actually, so effectively, obviously, they left the base rate at 0%. Were no surprise. But there are two other rates that don't get mentioned very often, which I think might be worth mentioning, and something probably, well, maybe not for everybody, but something to kind of keep an eye on in the future, because they may start tinkering with other, and that's their margin lending facility. That's at 0.25%. And then you've got the deposit facility at minus 0.5%. So if you want to park your money at the ECB, you're going to pay for the privilege. I mean, but anyway, so yeah, of course, they weren't going to do anything. And surprise, surprise, yeah, Lagarde's coming out going, well, inflation, well, it's kind of not how we expected it to be. Well, of course they're going to have to say that, otherwise, because if they actually would have to, if they didn't say that, they'd be admitting they didn't have a clue what was going on. Now, unbelievably, perhaps, and is they genuinely didn't think inflation was going to be a problem, and we've said this before, but it's worth reiterating. The reason they didn't think it was a problem is because they looked at everything that had happened since 2008 with QE, etc., and went, well, that didn't cause inflation, even though we know inflation's running much higher, but just relatively speaking, without actually realizing, of course, this time everything's completely different, as we said, because money's now in Main Street and not sucked into financial assets and effectively ring fenced inside the illusionary financial system. So, unsurprisingly, of course, on that basis, they went, well, we can't do anything, because they don't want to raise interest rates, as we know. Yeah, and there's a bit of a thing, and I kind of, Lisa and I were watching something a few days ago, and it's kind of really basic stuff, because with regards to what happened in 2008, and only because I was watching, because it was a kind of BBC production. It's quite an old thing, and I went, well, you know what? Let's see what the perspective. I mean, they interviewed some of the main players around that time, right? Bank of England governor and all this kind of thing. And I went, okay, well, let's look. And it kind of made me go, something I've never said that I should have said. Or maybe I have said it, but I've forgotten I said it. And really, when you look at the whole issue of what they did in 2008, one of the big ruses was the way they went, we need to prop everything up, including the banks, and we're going to pump all this money but only into the banks, because we're trying to save the financial system. Because since the financialization of economies, everything's about banks. And if the banks go, the economy collapses. No, even though we know the financial sector is not the economy, it's an illusion, but they, in their ridiculous belief, went, well, if we put money into that, it will increase the price of assets. And if we increase the price of assets everywhere, then that's going to create more disposable income, and eventually somehow it'll all trickle down into the real economy, which of course is never happened. And it's stayed pretty much so. The so-called rich have got richer. But here's a bit of a kicker to that. Notice how Facebook's share price got slammed, and literally hundreds of billions of dollars were wiped off its share price in the blink of an eye. And this is why I come back to the fact all these paper billionaires are not billionaires, because their wealth, paper wealth, could be eviscerated in the blink of an eye. And that's one example of a gyration that can happen just very quickly. But coming back to the point of this, another reason they don't want to start raising interest rates, and why they're actually now very concerned, is because if all the asset prices start getting slammed, then all this paper wealth that's tied up inside the financial markets will disappear. So all these people who have made good out of the post-2008 era will lose out massively in the process. So on that basis, they go, well, that's principally why we can't raise interest rates, because it will hammer asset prices. And asset prices is the economy, because we've built everything on the basis that that's the future, and somehow that's indicative of a strong economy. Well, we know that's utter garbage. I mean, we've said that many times. But what really telling is that, okay, so the ECB comes out and makes its predictable statement. As you say, all the usual jawboning, and what they're just banking on is they think they can ride out the inflation storm, and eventually it'll just fizzle out and they won't need to raise interest rates. But what I thought was quite telling is, and we come back to this thing, and I mean, not that I'm the biggest fan in the world of the dollar index, and we've made this point many times because it's heavily skewed towards the euro. But in recent days, the dollar index has fallen quite sharply, 5 successive days of falls. And what we notice is the ECB has come out with its statement that it's not raising interest rates, even though the Fed's not raised interest rates. And yet, what do we see? That today the euro dollar's up over 1% on the back of the ECB basically saying we're not doing anything. The dollar index took a bit of a sharp turn as a result of this. It's also worth noting is the pound euro's got weaker. So obviously there seems to have been this move, even though, I mean, okay, and we'll talk about what the Bank of England have done. But there seemed to be this sudden move back into the euro. Now, quite why anyone would want to move into the euro, for all the many reasons we can discuss, and we have discussed previously, and principally that the whole euro experiment's a complete failure because you can't marry all the economies. Now we're starting to see huge fractures in economies, in the financial system, and not least in Germany is in serious trouble with. Germany is the principal nation in Europe, is starting to have major problems. Some of them short-term, some of them are long-term problems that through the Merkel era, they never actually, of course, ever made any decisions to revitalize their manufacturing and industrial base, which has been the backbone of their economy for, well, almost arguably since Hitler came to power. It's now failing because it's all old industry and they haven't modernized. It's a bit like Britain, where it used to be massive coal mining and all these kind of things, and it just rested on its laurels. And then, of course, it became unproductive, it became economically unviable, and then it had nothing to replace it. So it gutted the industrial base of Britain without actually thinking there was anything to replace it, or considering that was an option. And Germany's going through this. So European Union's in big trouble, but there seems to have been this move out of the dollar into the euro. because the usual thing, there's on this ongoing move out the dollar into the yuan. But I think it's quite telling that we're actually witnessing the fact that why after, I mean, if the ECB would have been interesting and raised interest rates, what would we have seen? But there seems to be this ongoing perceived weakness of the dollar. And I think that's extremely interesting. I mean, the dollar's moved from the index from 96.23 as an intraday high to it's currently 95.38. That's quite a swing. I mean, so again, very much indicative of a weakness. We've seen a bit of a slamming of the Dow. I think at a low it was down. Well, it's down about 0.65%, not hugely, but FTSE's not well. Is actually ironically now down the same. That even after the Bank of England interest rate announcement didn't do actually anything. And you're absolutely right, Ken. Gold got slammed to 1789 or so, and it's now back at pretty much, as you say, parity. It's back at 1804 nearly. Silver
Yeah, it's
got,
like call it a flash crash.
Yeah. And silver got moved to 22 and is now back at 22.37 or so. So yeah, it's starting to recover. But to be honest, the markets are a complete mess. The algos, I jokingly said to someone the other day that the algos have got COVID because they don't know how to interpret anything anymore. It's an utter farce. So no one knows what to make of an interest rate, nothing, happening, and or Lagarde coming out going, well, inflation risks are tilted to the upside. What? So they're actually admitting that inflation is going to get higher, but we're not going to do anything about it. So we know all the reasons why, but we'll come to the Bank of England, which ironically, of course, had a very different perspective on things. And there's some interesting developments with regards to the UK. And this also puts into context why I keep saying the pandemic wasn't a deliberate policy, because the UK's come out today and wet the proverbial bed with regards to the domestic population. We'll discuss that in a minute because it's something that actually applies to UK families and why they've suddenly gone, hang on, we've got some major problems. And they're starting to get very nervous about and this all over the UK media about this cost of living crisis. They're calling it a cost of living literary crisis. So but we'll come to that in a minute. But same old sort of Lagarde process, just kick the can down the road. Let's hope somehow a miracle will happen. But at the end of the day, they can present illusions about interest rates. They can present illusions about inflation. But at the end of the day, Western economies are getting gutted, and you can't hide the illusion of that. So at some point, they're going to have to face their date with reality, and that's going to be infinitely worse for them in terms of the general populace than if they just held their hand up and started to admit there's a problem, because people would be angry, but at least at this point, they wouldn't suddenly wake up one day and find there's carnage happening, which I'm not saying definitively that's what will happen, but we're heading in that direction.
Yeah, it's fascinating you say that, because just yesterday, new story out, cost of living in Europe, and I'm assuming this is a continent minus
Yes.
the UK, smashes to an all-time high. And one of the more interesting things that has really changed with central banks is central banks used to be built on being flexible and not rigid in we're not going to make any decisions until our bi-monthly meeting. I mean, even Greenspan, when he just before the financial collapse of 2008, Greenspan would raise interest rates in between the FOMCs if he saw things were starting to get out of, so while their policies were held too long, which created the bubbles, at least they were willing to be able to move when necessary, and that of course stopped when the entire West went into QE, stimulus and interest rate, ZERP and NERP. Well, that's the thing, you find out with obviously last week's FOMC. we're not going to do anything. We're just going to jawbone until March and see if things hopefully get better. Instead of actually doing something to try to improve, they're waiting until these days that they can go ahead and set benchmarks. And really what it told me is that the whole purpose is to allow Wall Street and the banks to front run everything, because they have no real intention of doing their mandates, i.e. price stability and low unemployment. That aside, of course, take a look at the ECB. You take a criminal lawyer and put her in charge of the ECB and think that things are going to improve, get better. No. And likewise, when there is a crisis, these individuals just aren't prepared for it. They don't know what to do, and they can't they refuse to accept the fact that it was their policies that helped create the situation before. And I'm going to say one more thing before we go, let you talk about what's going on in the UK. The new job claims came out for the US today, and leading up to it, everybody was talking about how dire it was going to be because Omicron was getting all these people quitting. And no, Omicron was the equivalent of a flu. People didn't quit their jobs. They weren't fired from their jobs. They simply took between 3 and 5 days off to deal with Omicron. So new claims have nothing to do with Omicron. What new claims have to do that they don't want to tell you about is it has to do with all the people getting fired because of the vaccine mandates. And this, because they continue to obfuscate the truth behind it's that their own policies that are creating all of this garbage, then nobody in their right mind can think that they actually have a solution when they won't even admit that they're the ones who caused the problem.
Yeah, absolutely. A few points still about Europe before we move on, because you talked about, the inflation, headline inflation was 5.1%, which was a record high. But let's pick on the Netherlands. Netherlands is obviously something close to heart for us, and their inflation, according to EU standards, was 7.6% in January and 6.4% in December. And that is a huge hike. Now, obviously, quite a large part of the Dutch economy is based on agriculture. But of course, to grow things, and because they grow things all year round, it needs energy. So the cost of everything hikes in terms of rising energy and food prices. The other point worth making is they're starting to have issues to do with in terms of energy in impeding their ability to grow produce. Because all over the Netherlands, got these massive greenhouses. I mean, greenhouses on a scale you couldn't comprehend. They're just enormous, and it allows them to grow produce, let's say, all year round. But the problem is there's an energy implication. So there's something that's obviously hitting the Dutch economy. The housing market there, I think I've said before, is insane. It's the most crazy housing market I've seen outside probably Vancouver. Obviously, I'm sure everyone knows that's in Canada, but it's kind of nonsensical what we're seeing. And the other thing worth mentioning, I haven't checked it today, but natural gas futures was up 14% yesterday, which again, there's this sharp rise where we're seeing it kind of move with wild gyrations to the north. This is going to have serious implications. We're certainly starting to see very clear evidence of food shortages in the US, problems that are now starting to stack up everywhere. And in terms of, we always made the point way back that energy and food security were going to be huge problems in the future. And in a way, the pandemic is just an accelerant of that. It hasn't. It certainly, was there in already, but now it's just getting appreciably more difficult. And I don't know whether you mentioned in your market wrap-up yesterday's ADP, which to say was a miss was an understatement. Or was that what you were referring to? And it came in at minus 300K, and the estimate was about 200k and the previous 807k. I mean, and that's obviously rigged. So what was it in reality? Minus 500,000, minus a million, who knows? But
yeah, I was talking about today's jobless claims.
Oh, okay. I've not seen them yet. So, okay, but yesterday's ADP is another example. Yep. And as you said, they're trying to blame it on all manner of things. So, yes, there's clearly inflationary problems, but they don't know how to deal with it because they simply can't even grasp and comprehend that QE zero interest rate policy for more than a few months, or as a short hit to resolve a problem is all it should ever be implemented. And now it's been going on basically for 12, 13 years. Every time there's a problem inside the financial system, they resort to some chicanery in terms of propping it up. But to prop it up is because for them, that's the engine of Western economies, even though it produces no wealth. I mean, but in their mind, asset price inflation is good for the economy, even though, of course, it's nonsensical because it only tends to benefit the richest. But even they're now going to start getting hammered in terms of, not that we're complaining about that, in terms of their investments, because, as we said, what happens if you start? What happened with Facebook yesterday starts to become routine. What happens if we start to see the decimation of individual stock, which have high net worth individuals remain invested in? Because the one thing they're not piling into sound money, that's for sure. Yeah, there's some movement into cryptos and some degree of movement into like Bitcoin, etc. And so, but predominantly, a lot of it is all related to this paper nonsense. And once the wheels fall off, what are they going to do? Trying to sell out, then there's going to be a bloodbath. So another point, and I'm not going to get in because we don't deal with the politics. I'm not going to get into the whole micro strategy, what the hell they're doing, because we don't end up getting accused of things or anything. But the one thing, and I made a tweet, which is quite legitimate, is how fascinating we're seeing this correlation between a movement in the price of MicroStrategy and the movement in Bitcoin, meaning when Bitcoin's down, MicroStrategy is down. When Bitcoin's pumped up, then MicroStrategy tends to go up. It's not mirrored precisely, but there is this broad correlation. And for me, that's extremely interesting, given how much MicroStrategy seems to be buying up every Bitcoin it can lay its hands on. He bought 600 more. Was it yesterday? Anyway, the point is they own billions of dollars of it now. But I just thought that was just a point to throw in without any context, just to say if people are interested, something to note, and that there is a correlation between the two.
Well, it's not surprising if the price of gold goes down, the gold miners go down.
Yeah, but when the price of gold goes up, the gold miners go down. So, it's gold miners. But anyway, the whole gold mining sector we're back to that thing where we've discussed this before, so we won't tread on that ground. But it's kind of interesting that we're talking about all this decentralization. Well, we've proved the point and said this before, how Bitcoin now mirrors major indexes, or in this case, MicroStrategy. So there isn't this idea of decentralization is nonsense. But anyway, I digress. But the point is, what we're seeing in Europe is rising inflation, rising problems in terms of food and in terms of energy costs. I mean, and insanely, of course, Europe still keeps persisting. We're shooting itself in the foot with regards to Nord Stream 2. And they're complaining about a lack of energy and then accusing the Russians of using energy as a weapon, when in fact it's under the mandate of the US. Europe's shooting itself in the foot with regards to obviously energy itself, where they could double energy supplies. But let's move on, as you say, to the Bank of England. Now, of course, the Bank of England came out today and went, well, actually, we're bucking the trend. We're going to raise interest rates another 25 basis points, 0.25%. So it's now base rates at 0.5%. Now, what the UK's strategy is different from the ECB and obviously the Federal Reserve, in that they're going, well, we know inflation's a problem, so our strategy is we'll try and creep interest rates up, hope it doesn't impact markets too much, hope it doesn't impact the debt-ridden country we live in, just enough to maybe curb some inflation. Britain's actually taking inflation, I think, more seriously than mainland Europe and certainly the US. I'm not talking about the people, I'm talking about central bank. Now, with Britain, there's kind of some very interesting developments, because obviously, because of the big hike in energy costs, the regulators went, well, the cap's coming off in April. So then there were, energy prices were going to skyrocket, which is why I said back in August, we quickly realized what was going to happen and sign into a deal. So our prices are protected for 2 years, which for me was a no-brainer move. Again, it's one of those things where if you understand these things, and based on the discussions we've had, then people would hopefully have made those decisions living in the UK if they can. I mean, if you're already locked into a deal, you can't get out of it. But the point being, there's this massive hike. So we now have a cost of living crisis where it's starting to get inflation everywhere. We're having a hike in energy costs, a hike in food prices, and across the board, inflation's rising. So this is the insanity, though, of government policy, because they decided that even though they printed hundreds of billions of pounds and had all this furlough schemes and bailouts, but somehow they're going to have to restore public finances, meaning we're going to have to balance our books. So I know we've got this harebrained idea, we're going to raise national insurance contributions. Effectively, it's another income tax on people in the UK, which used to pay for the health service, but can't pay for the health service, but because the health service costs too much now. But anyway, the point being, it's a hike in taxation, so it's kind of almost austerity by the back door, which is crazy. I mean, as we said before, completely the wrong point in the economic financial cycle. But then in the next breath, they're going, hang on, the cost of living crisis, and people aren't going to be able to feed themselves or heat their homes or whatever. So we're going to have to now kind of give people families a kind of bailout, which means we're going to give you, I think, £250 or back on your energy, or £200 on your energy bills. And if you because council tax is like a local tax that's supposed to pay for the fire brigade, police, cleaning the streets and making sure all the street lights work, and just generally funding local council operations. And they're going to give everyone who's in the lower kind of council tax bands rebate. I think it's about 150 or whatever. Anyway, the total amount's about £350. So I don't know how many million families fall into this, but let's just say it's 10 million families. Well, suddenly what they're doing is they're going, well, if we don't give them this money back, and look like we're actually trying to do something, then we could start to have social unrest. And there is an argument that says absolutely that's true. But if you look at it, I don't know, 10 million homes, say, I don't know, that's 100 million, 1 billion, maybe 3.5 billion they're going to have to give back to people after wanting to claw money from taxation via national insurance. And then, of course, missing the irony of all ironies, that what caused, or was the cause of all the huge inflation and hike in energy prices, is because of the very policy that they're now going to implement again to give people money back because they caused it in the first place. I mean, it's kind of the classic death spiral in terms of when you start making crazy, insane decisions like that. But again, when people go, they're trying to destroy everything. We always said nonsense, and it is nonsense, because now the UK government, in blind panic, going, we could cause a massive societal unrest. So we're going to have to start giving people money back to supplement for the fact they've got this huge hike in energy costs. And We'll give you some council tax money back. In fact, we'll just give you some money because we just don't want the masses basically having societal meltdown. And that's how serious a problem it's got. And again, why they had no intention of deliberately doing anything. Because according to the people who say it's all deliberate, they were going to destroy everything and make us penniless. Well, they seem to be doing a very peculiar job of doing that. Well, of course, we know that's not true. So in Britain, it's starting to become a major problem. We're seeing huge problems in the economy. I know people in hospitality who have said to me, you know, there's people who own restaurants, or know people who own restaurants or pubs or whatever, and they're just empty half the time, and very little custom in there, because people have just reached the point they don't have the disposable income anymore. So inflation's beginning to kick in, and hospitality, the service sector, is a huge part of the UK economy. And then, of course, there's traditional industries that are starting to suffer. The housing market's beginning to creak, which is long overdue because it's a complete bubble in of itself. But there are big problems starting to surface. Now, the argument is, the Bank of England's perspective will be, well, if we just keep tinkering with raising interest rates, this is going to cure inflation. But of course, A, it won't cure inflation, and B, all it's going to do is start raising people's debt levels. I mean, people are going to start credit cards, because of course, rather like most Western countries, the UK economy is fueled by a lot of credit or debt. They're going to start raising their rates. Notice they're not raising the interest rates on the your principal in banks, so you get, you'll get some meager return on the money you have, if you have any in the bank. They're not doing that, but they'll start to apply. It's going to start hiking interest rates in mortgages, etc. So it's going to start having a very, very serious impact, and they're banking on the fact that it'll do enough to curb inflation, which, as we know, it won't, because, I mean, what's 0.5% when inflation's running in reality at 15% or whatever it might be? The other thing is, of course, is producers are still trying to absorb a lot of the costs. Well, they're going to reach breaking point. That's everywhere in the Western world. So they're going to have to start passing on the cost. But we've noticed some stuff is now they're starting to hike costs. But what's telling, and we've noticed this in terms of fresh produce, which I think is an interesting development. A lot of that used to come, obviously, from Europe. A lot of the fresh produce in the UK is now coming from South America, Peru, and places like that. And interestingly, I went into the supermarket, this will amuse you, Ken, a couple of days ago, and bought some just fresh sweet potato, not the frozen variety, the ones you obviously have to peel. Guess where they were? Guess the origin of production. It was the US. We're actually getting sweet potatoes grown in the US, shipped to the UK. I mean, I'm not seeing things like that. So Britain is trying to diversify out of the European market, and I don't think it's political. I think what they're trying to do, companies, is going, well, maybe we can go and buy produce somewhere else and it'd be cheaper, and therefore we can try and avoid some of the inflationary costs, because I think they're being told, look, if you start to hike food prices, and food prices go up 10, 15, 20%, and then energy's gone up 40, 50%, and everything else starts to escalate, they are really concerned now that this cost of living crisis will see millions of jobs wiped out and millions of people wiped out. And we've always come back to the point, which we've said since the start of the pandemic, they'll never want that to happen, because that will cause mass civil unrest. And then the risk is that the government loses complete control, which they most certainly would do if it's spread like that.
Yeah, plus the fact that, the supply chain, the global supply chain issue still hasn't been addressed fully. You're seeing the ramifications of the green, the climate change policies, i.e., Germany shutting down its nuclear facilities. You have all these different things that are all coming to a head at once. The inflation, that's the thing, and more important, this is what the central bankers just can't get in their heads. It's almost like the political policies have overridden anything that they could potentially do, because the primary move for high inflation was the lockdowns, the destruction of the supply chain, the rising cost of energy, and the things going on with the climate change policies. And so what you have then is you have really a supply and demand inflationary thing, which is something that the central banks really can't control, because it has nothing to do with monetary expansion or detraction, but it has everything to do with the just-in-time fragile system that had been created around the world, and policies made by the pandemic shattered it, and they really don't know how to get things back on course. Then, of course, now you have the um, vilification of your primary suppliers, i.e., Russia deciding that they're going to go ahead and protect their own by stop exporting ammonium nitrate for fertilizer, and all. And,
Hmm.
and look at what Germany's biggest problem during World War II was. They didn't have access to oil. That's why they had to go into Norway. That's why they had to go into make deals with Iran. If you think about it, um, Iran changed their name from Persia to Iran to placate Hitler. Because Iran really means land of the Aryans. So
Oh,
you know,
yes.
and since there's so much ties and needs to Russia for energy and exports of produced goods from China, and you're vilifying is it any wonder? Plus the fact now you want to play this economic war to try to keep the hegemony going, and whether you are for or against it or not, those who are vassal states under the U.S. empire, i.e., much of Europe, they're going to feel the consequences and brunt of Washington policies. So there's so many different things affecting this, and because they have chosen Washington, and those that decided to follow have chosen this course of action. One, it's never going to fully recover, so inflation is here until at least the currency collapses. And secondly, how long can the central banks, through the institution of financialization, keep asset prices growing, stable, or from declining, and without implementing hyperinflation? Because if you have a supply and demand inflation, that's one thing. The worst thing you're going to have is high inflation. But if all of a sudden you implement monetary expansion, then you're going to get that loss of confidence, which we're starting to see. Loss of confidence in the dollar internationally. How soon till loss of confidence in the dollar domestically? And then it's over. So things are already on pace towards the end game destruction. All matters now is how quickly is it going to come?
Yeah, absolutely. The other point worth making, after the ECB didn't announce an interest rate hike, there must have been some fear, because it's interesting in the sort of EU banks. A couple I will mention is that Deutsche Bank and Commerzbank, who've always, for me, been very flaky entities in Germany, of course. The share price rose over 5% on the back of this. So there was instant relief amongst banks that, thank goodness you're not raising interest rates. Of course, in the UK, shares in all UK lenders kind of obviously spiked, because, rose sharply because of their announcement of hiking interest rates. Well, I mean, there's the kind of peculiar way people's mindsets think of investing, not going, well, actually, that makes these more risky. Okay, they might be able to charge more, but in an environment where everything's debt, there's this debt-fueled zombie kind of zombified economy. lenders hiking interest rates themselves are actually putting themselves at significant exposure, but people are just reacting in very, very peculiar ways. And that's another way where you've seen this kind of relief in Europe. Well, we haven't had interest rates rising, and because it's absolutely clear that once we say once, but should Europe raise interest rates, then the banks and the will get hammered, because and the argument would be, okay, why would that be the case? Why would the banks be extremely fearful? Well, because not least we have sat inside the Western financial system this hundreds of quadrillions of interest rate swaps. Interest rate rises don't work, or interest rate swaps don't work or respond very well to interest rate hikes. So the argument will be, okay, we don't know exactly what's hiding inside in terms of the derivatives markets inside the banks, but clearly there's to be an impact, and rising interest rates start to therefore impact the banks themselves. They are starting to be extremely nervous as to what the consequences will be for them in terms of raising interest rates, because they're going to have to start passing on interest rate rises as well. What happens in terms of interbank lending? What's going to happen will it make banks more reluctant to loan money to each other? And because they're starting to get extremely nervous about the broader implications. So there's a lot of factors in terms of how the banks will react to this. But the fact you've seen Deutsche and Commerce rising over 5% on the basis that they didn't do anything, I think is very indicative of the nervousness that exists inside. More so Germany, I didn't really see any huge hike. I didn't see anything, for example. I always look at a sort of certain banks. So I looked at BNP Paribas, and that didn't move up. Credit Agricole was up about 1%. So there is some, etc. But German banks particularly, they're obviously extremely nervous of interest rate hikes. And I think it's because, we've always said, inside Deutsche Bank, there's all manner of very, how do we put this diplomatically, peculiar things going on. I've always said for me, it's a bank with a lot of strange things going on inside it, and of which there's no transparency, as we know. But they're extremely nervous. So, actually, interesting. I probably should have looked is what happened with UK banks on the basis of interest rates going up. Well, Barclays actually went at 1%. As an example, Lloyd's is not something that's up nearly 1%. So apparently, UK banks seem to think raising interest rates is a good thing. HSBC is pretty flat. With quoting, Standard Chartered is a good UK bank. That's up nearly the same, very much in the 0.9% hike. So in fact, UK banks don't seem to think that hiking interest rates is a problem. Well, they're obviously not actually appreciating the reality that in a debt-fueled economy, when you start hiking interest rates, the risk is that these banks have any capacity, any lending capacity, any involvement with, are now going to be significantly more at risk, apart from the inflationary risk, because of all these banks, whoever they lend to, whatever businesses they lend to, are now going to be significantly at more risk of rising inflation and starting to hike interest rates, as well as consumers who risk also losing their jobs because business is going to become less and less productive and competitive.
Yeah, and if you think about it, honestly, most of these banks, the reason that they're so affected by interest rates are not, they don't lend to commercial anymore. Everything that they do is based on cheap money or interbank lending, so that they can foment their own investment book, or to go ahead and play the derivatives market. the vast majority of American banks really don't lend to small business. The only thing they
No.
deal with is automobile loans and home loans. They're not growing businesses. They're not doing those type of lending. They're simply based on. I mean, all you have to do is take a look at what most banks have done. They've they borrowed cheap to buy back shares. They're not actually borrowing cheap to then lend out and then charge higher interest. Because if you think about it,
Mhm.
raising interest should be a boon to the bank, because that means that they can charge higher rates to small businesses or individuals or mortgages, etc. They're going to get in more revenue from that, except for the fact that since financialization has taken over the banking system, they primarily are investment banks and rarely do commercial banking anymore. So raising interest rates, okay, you might raise credit card rates, big whoop. That's about it. So I can see why they're doing that. If you raise interest rates, it's going to cost them more to borrow, to do stock buybacks, or to go ahead and keep the plate spinning in the derivatives and the interest rate swaps and all that they have going. That's the thing about it is none of these institutions close out their trades, you know, and so they don't have any capital. You have, I mean, ever since the pandemic, there's been tens, if not hundreds of trillions of dollars of liquidity thrown at the banks, and it's still not enough. That should speak volumes right there, that they cannot really afford to raise rates, and they never will.
No, you absolutely, mate. I mean, in Europe, the lending is different to the US. There is more lending, obviously, with regards to small businesses or businesses, but certainly not at the level it should do. And here's the point: if they weren't prepared to loan the banks to when interest rates were cheaper and the economy was notionally in better shape than it is now, they're certainly going to be less inclined to want to loan to the likes of you and I, because they'll see us as a far more significant risk. Uh, so therefore, it's just false economy, but for them to do it, and also far more risk that they would apply to themselves, even if they were lending to the likes of you or I, or small businesses, or even medium businesses, size businesses. But as we say, when you start to get interest rates rising, it's going to screw up the derivatives markets extremely badly. You've got to also remember there is obviously the basis trade between exists between interest rate swaps and treasuries. So if interest rates start hiking, what's it going to do to an interest rate swap in of itself? And also, how does that work with treasuries? So it starts to massively complicate the whole process when we realize, excuse me, how intertwined interest rate swaps are with the treasury market. And that is not a small problem. That's an enormous problem. We're talking, well, hundreds of trillions of dollars potentially. I mean, it's something that's very difficult to quantify specifically, but that's far more of a problem that they're going to experience, and why because for so long they've had this kind of notional, in inverted commas, stability in terms of low interest rates, just endless QE, which they can obviously, as you say, they don't want it going in the real economy, because they're terrified that and they know full well in the real economy it'll just be consumed, and most people won't ever pay the loans back. So they're going to lose out massively, because it's not as though they're going to have any assets to take as a result of this. Because what happens if somebody takes out multiple loans, multiple credit cards, and all scrapping to try and take out whatever they can out of an individual if they're declared bankrupt? What are they going to get out of that person or individual? Practically nothing, because everyone's going to be feasting at the table trying to get what they believe is rightfully their share of the spoils in that very unfortunate situation for the individual, but they're not going to get anything out of it. So yeah, The other problem they're going to and they are starting to experience in the banking system or financial system is even they're getting scared and nervous about trades they're making because of the enormous volatility that is existing now in equities, in bond markets. I mean, they were kind of logically going, well, this must happen. So they were starting to drive the bond markets in a certain direction. But okay, if the Fed doesn't raise interest rates, that changes the perspective. But we know that the entire bond market's being propped up. And therefore, therefore, how does any player who's trying to trade in the bond markets work on that basis? It's not a level playing field, even for the hedge funds in this world, etc., who used to try and trade this market very heavily. They're sat there going, we don't want to trust this. And that's why these banks and hedge funds are going, well, let's move into cryptos. Let's move into something else because we'll speculate on that because we can get, well, greater returns. But they actually think, despite the volatility and the lack of regulation, that somehow they can benefit from that. So that's why they move more and more into very dangerous speculative ventures. So it's not like a question of the financial sector's in control, and the whole thing's completely out of control. And no one really has a grasp of anything anymore. And everyone's just trying to make a yield somewhere and betting on, like companies in Chapter 11 and going, well, I'm gonna buy their bonds, or I'm going to move out of investment grade bonds into junk bonds, which are hugely speculative and full of risk, but there's a yield on that. So I'm prepared to take that risk, but it's risky speculation. And if things suddenly blow up, you're going to see a catastrophe in not just the traditional banking sector. You're going to see catastrophe in other financial institutions, in hedge funds, money markets, etc., because they're all making extremely dangerous and risky speculative bets on things in markets they would never have gone into traditionally, because they can't make their kind of solid, I don't know, 0.5%, 1% on some carry trade. They can't even do that anymore because that has become a very, very precarious market for them. So it's kind of ironic that this policy has now got to the point that the very beneficiaries of it are now starting to suffer the consequences of, of what they've sowed. They're going to reap, and they're basically, cutting off biting off their own nose to spite their face, as we say.
Exactly. We are definitely at the time of worrying about a return of your money rather than a return on your money. Paul,
Yes.
Paul, I want to thank you as always for being a part of this discussion today. Really fascinating things, because everything is coming fast and quickly, and we won't even know what's going to happen tomorrow if everything is falling apart today. Anyway, I want to thank you, the community at the Gadfly, for being a part of this as well. And until the next time we get together, have a great Thursday.